Hey guys, for those of you that are just joining us, we're going to get started here in just a moment. We're having some folks trickle in right now and getting some technical glitches sorted, but we'll get rolling here in a moment. For those of you who might not be familiar with HopSkip, we're a platform that professional meeting and event planners use to streamline how they source and contract hotels for business events, meetings, conferences. So we work with a ton of professional meeting planners. We work with a ton of hotel sales teams. And joining me today is Barbara Dunn and Kelly Bagnall. Barbara, you want to introduce yourself?
Thank you. Good day, everyone. Thanks so much for being with us. I know Kelly will be joining us hopefully momentarily. I'm Barbara Dunn. I'm owner of Barbara Dunn Law based out of the Chicago area. And for 33 plus years, I've had the pleasure of getting to work with groups in connection with their meetings, events, and trade shows. So happy to be working with my friends at HopSkip and, of course, Kelly Bagnall. And we'll continue our dialogue, our counterpoint legalese with the ladies. We welcome your questions today. Hopefully you have time at the end for you to put those in, but please feel free as we go to put questions in the chat. We have your questions lined up today, and then some other topics that we'd like to talk to you about. And of course, no legalese with the ladies webinar would be complete without my disclaimer that while we are lawyers, we'll be talking about a lot of legal issues. Certainly, this is not legal advice. Hopefully, if you hear something, you have some information to share with your legal eagle to talk through that contract provision that you might be working on or look for best practice language. Sean?
Thank you, Barbara. So we are going to jump into our first question, and it is going to be actually a poll. Excuse me, before I jump ahead. We want to do a quick temperature check for the folks in the audience. What is your biggest struggle in terms of legal areas today? What are you struggling with most? We're going to have a poll displayed. It should be on your screen right now. Look at that. What legal area do you struggle with the most today in the world of meeting and events? Contracts, liability, insurance, accessibility, labor and staffing, or none of the above? Looks like folks are saying contracts is number one. In general, I'm assuming that's just contract challenges. Liability as the second place, and accessibility coming in at number 3. We're going to let the polls this time too stay out a little bit longer than we typically do, just so we can make sure all folks are getting an opportunity to provide their feedback. All right.
As we let the polls close, Sean, I'll just say, not surprising, of course, contracts. Certainly we're at a time of the year in Q4 where a lot of groups, obviously a lot of hotels are working to close contracts. And so glad that you all are joining us today for some updates in that area.
Definitely. All right. Thank you, everyone who contributed too. I should always reference. So the reason why we ask these polls, it's super important because what it does is it helps inform it really like the webinar team on which content we should be introducing for future webinars. And it also helps educate your peers as well for them to be able to understand how their peers are kind of seeing the world of meeting and events. So please participate. It's definitely value added. We're going to go to our first question, and that's actually for Kelly. So I'm going to go to my next question. When do I use an addendum versus an amendment? Are there strategies, Barbara, to avoid conflicting terms?
Yes, Sean, there are, and I can answer that. And when Kelly joins us, I'll have her share her example. So just to level set the stage, and some of you probably remember our pet peeves discussion, or at least my pet peeve discussion in the past. An addendum is part of a contract. And what it does is it adds specific details to a contract. It's part of the contract. It's attached to the contract at the time it's signed. So for example, the hotel will provide function space as outlined in the attached addendum, and the addendum then details the function space schedule, etc. after that contract is signed, if you need to change that contract, that's not called an addendum, it's called an amendment. And the key with an amendment, it takes two parties to make the contract, takes two parties to change the contract. The amendments will always need to refer back by name or by date to the contract that that document is amending. And then if there are more than one amendment, certainly whether it's amendment 1 or 2, or whether they're sorted by date, it's all important that they refer back to one another in order for it to be clear what the actual agreement is. So one of the challenges, Sean, that comes up often, besides the use or misuse of the terminology, is a circumstance in which a group might have, from perhaps in-house legal counsel, a set of standard terms and conditions, and those might be listed as an addenda to the contract. The strategy in those cases for negotiation often is to present a hotel with a set addendum, say, here, go ahead and attach it to the contract. And from the group's perspective in their mind, thinking that's going to take care. In other words, what's in the addendum is going to override, supplement all those things that are in the contract just by virtue of it being attached. So from my perspective, and I know Kelly will add from the hotel's perspective, I do not think that particular addendum approach is the best strategy. Because often what it does is it allows gaps or inconsistencies in a variety of issues. And we can walk through a particular example when Kelly joins us. But what my recommendation is to the group side is to take that addendum, those clauses in the addendum, and use that as an overlay. In other words, that often an amendment is referred to as an addendum. In other words, after the contract signed, we need to change the room block. Oh, let's do an addendum. I think it's often because that term has become a bit commonplace among folks. And I think that's the case. And again, if you've called something an addendum, don't worry about it. Don't fret over it. Don't think it doesn't apply. You could honestly call it what you want. But at the end of the day, from our standpoint, on the lawyer side, again, group side, legal side, where we see problems come up is that those documents aren't properly integrated or referred to in the contract. In other words, they don't do what the parties want them to do or need them to do. And that's obviously a concern because, of course, that's the main reason the parties want to do that.
Well said. Well said. All right, let's go to our next poll question. Have you ever been involved in a dispute regarding a cancellation? We're going to talk about force majeure and cancellation penalties in today's webinar. We're going to get started here in just a few moments. We're going to let some folks trickle in and we'll get rolling. You guys, for those of you that are just joining us, we're going to get started here in just a moment. We're having some folks trickle in right now and getting some technical glitches sorted, but we'll get rolling here in a moment. Guys, we're going to get started here in about 30 seconds. No one's able to hear us. Barbara, can you hear me? Yeah? Okay. Mute the video. Yes, Amy Dottie, you're so smart. I don't know why this program always does that by default, mutes the video when folks join. If anybody has any technical issues trying to get into the webinar, or trying to get the sound or video playing, just feel free to send a message and we'll see if one of the HopSkip team members can assist. We're going to get rolling in just a moment. One of our presenters is actually having some technical issues. Kelly getting into the room. If she's not able to get in the next minute or so, she'll be here soon when we'll get rolling, because we know everybody's time is valuable. Looks like a lot of folks are saying they can't hear. For those that have just joined and can't hear, you appear to have to unmute the video, which by default, it looks like it gets muted for you once you join. There's a yellow bar above the video. Click unmute. Thank you, Tiffany. So smart. All right, we're going to get rolling here. Looks like Kelly is entering. Might be still running into the same issue. So why don't we get started? You know, everybody's time is tight. So thank you, one, for joining today's webinar. I am Sean Whalen. I'm one of the co-founders and CEO of HopSkip. For those of you who might not be familiar with HopSkip, we're a platform that professional meeting and event planners use to streamline how they source and contract hotels for business events, meetings, conferences. So we work with a ton of professional meeting planners. We work with a ton of hotel sales teams. And joining me today is Barbara Dunn and Kelly Bagnall. Barbara, you want to introduce yourself?
Thank you. Good day, everyone. Thanks so much for being with us. I know Kelly will be joining us hopefully momentarily. I'm Barbara Dunn. I'm owner of Barbara Dunn Law, based out of the Chicago area. And for 33 plus years, I've had the pleasure of getting to work with groups in connection with their meetings, events, and trade shows. So happy to be working with my friends at HopSkip and, of course, Kelly Bagnall. And we'll continue our dialogue, our counterpoint legalese with the ladies. We welcome your questions today. Hopefully you have time at the end for you to put those in, but please feel free as we go to put questions in the chat. We have your questions lined up today, and then some other topics that we'd like to talk to you about. And of course, no legalese with the ladies webinar would be complete without my disclaimer that while we are lawyers, we'll be talking about a lot of legal issues. Certainly, this is not legal advice. Hopefully, if you hear something, you have some information to share with your legal eagle to talk through that contract provision that you might be working on, or look for best practice language. Sean?
Thank you, Barbara. So we are going to jump into our first question, and it is going to be actually a poll. Excuse me, before I jump ahead. We want to do a quick temperature check for the folks in the audience. What is your biggest struggle in terms of legal areas today? What are you struggling with most? We're going to have a poll displayed. It should be on your screen right now. Look at that. What legal area do you struggle with the most today in the world of meeting and events? Contracts, liability, insurance, accessibility, labor and staffing, or none of the above? Looks like folks are saying contracts is number one. In general, I'm assuming that's just contract challenges. Liability as the second place, and accessibility coming in at number 3. We're going to let the polls this time too stay out a little bit longer than we typically do, just so we can make sure all folks are getting an opportunity to provide their feedback. All right.
As we let the polls close, Sean, I'll just say, not surprising, of course, contracts. Certainly we're at a time of the year in Q4 where a lot of groups, obviously a lot of hotels are working to close contracts. And so glad that you all are joining us today for some updates in that area.
Definitely. All right. Thank you, everyone who contributed too. I should always reference, so the reason why we ask these polls, it's super important, because what it does is it helps inform it really, like, the webinar team on which content we should be introducing for future webinars. And it also helps educate your peers as well, for them to be able to understand how their peers are kind of seeing the world of meeting and events. So please participate. It's definitely value added. We're going to go to our first question, and That's actually for Kelly. So I'm going to go to my next question. When do I use an addendum versus an amendment? Are there strategies, Barbara, to avoid conflicting terms?
Yes, Sean, there are, and I can answer that. And then when Kelly joins us, I'll have her share her example. So just to level set the stage, and some of you probably remember our pet peeves discussion, or at least my pet peeve discussion in the past. An addendum is part of a contract, and what it does is it adds specific details to a contract. It's part of the contract. It's attached to the contract at the time is signed. So, for example, the hotel will provide function space as outlined in the attached addendum, and the addendum then details the function space schedule, etc. After that contract is signed, if you need to change that contract, that's not called an addendum, it's called an amendment. And the key within amendment, it takes two parties to make the contract, takes two parties to change the contract. The amendments will always need to refer back by name or by date to the contract that that document is amending. And then if there are more than one amendment, is more than one amendment, certainly whether it's amendment one or two, or whether they're sorted by date, it's all important that they refer back to one another in order for it to be clear what the actual agreement is. So one of the challenges, Sean, that comes up often, besides the use or misuse of the terminology, is a circumstance in which a group might have from perhaps in-house legal counsel a set of standard terms and conditions, and those might be listed as an addenda to the contract. The strategy in those cases for negotiation often is to present a hotel with a set addendum, say, here, go ahead and attach it to the contract. And from the group's perspective in their mind, thinking that's going to take care. In other words, what's in the addendum is going to override, supplement all those things that are in the contract just by virtue of it being attached. So, from my perspective, and I know Kelly will add from the hotel's perspective, I do not think that addendum approach, that particular addendum approach, is the best strategy, because often what it does is it allows gaps or inconsistencies in a variety of issues. And we can walk through a particular example when Kelly joins us. But what my recommendation is to the group side is to take that addendum, those clauses in the addendum, and use that as an overlay to a hotel contract to say, oh, well, I like our
So we would love to know if that's an experience that you guys have uncovered in your time in the meeting and events industry. And we should have the poll being displayed. Looks like it already is. Yep. Right now, looks like, wow, 90, 85% have. Interesting. And also, I guess most folks too probably on this call went through COVID. So that probably is a little bit of an asterisk. But that's good to know, because we'll make sure we continue exploring that topic. If everyone could try and get.
Yeah, Sean, I mean, this is not, as you said, not surprising to either one of us. But what I think is interesting about this poll question is focus on dispute. Because, I'm sure everyone perhaps has been involved in cancellation, but on the dispute side. So just for a moment, talking about the common types of disputes that we might see on cancellation. First is often a debate on whether a cancellation is with liability, meaning paying a cancellation fee, or whether it's without liability. That is, the so-called get out of jail for free, card, if you will. Often for a lot of groups, and certainly on the hotel side, I'm sure, would say that there's often a dispute on that very topic. And of course, that very topic makes the difference, right? Whether they write a check or I don't write a check. So when we talk about, as you mentioned, force majeure, cancellation, construction, so forth, we focus a lot on those so-called rights of cancellation or right to cancel without liability. But often, again, the parties, hotels, and groups see that differently. And then if there are cancellation fees due, then we often see disputes over the calculation of the cancellation fee, right? Because there's a lot of disputes often on the date parameters of a sliding scale or the percentage calculators for how we achieve those numbers. And of course, the list could go on where we talk about resale and so forth. So whether you've been involved in a dispute, sounds like most of you have, or you haven't, hopefully not yet, and you won't be, I would definitely just might be mindful of the cancellation provision in all of your contracts. Because in as much as we might all say today, oh, that's never going to happen, right? We're never going to cancel. We all have to hope for the best and plan for the worst. And the cancellation clause, again, on all sides, should be very clear about when it applies. And then in terms of a fee, how you calculate that fee.
And what do you see, Barbara, as the best approach to getting alignment on the calculation of that fee? Is it typically in the contract? Is it typically even before the contract and they're getting aligned before it goes into the contract? How does that work?
Yes, so, Sean, I would definitely say I would always seek to have alignment going into the contract negotiation. So, for example, a group in their request for proposal or RFP could put in whether it's language or whether it's just an approach. For example, when it comes to cancellation, we are seeking a sliding scale approach. We're seeking flexibility on date parameters. We're looking for, again, we could talk separately, lost profit and so forth. So those are things that the group could put out there on the table, if you will, ahead of the negotiation for the hotel to respond to. And the goal with that, of course, is that hopefully when the contract draft comes along, the language in the contract will reflect that. And I think that's particularly important. One nuance I see a lot of times, Sean, is a cancellation fee clause that has both a dollar amount and a percentage approach, meaning, 25% of room revenue, for example. And it's interesting because, of course, in a lot of cases, not surprisingly, those two things don't add up to the same numbers. So it leaves open for dispute potentially what that cancellation fee is. And of course, if later the group amends the contract, hotel, they agree to amend the contract to change the room block. If the original contract has dollar amounts and we don't change those in the amendment, we're left with the dollar amounts, right? So I raise these issues just to say, again, even if you don't think you'll be involved in a cancellation, and no one hopefully does, and you are, the best thing you can do on behalf of your own organization, hotel or group, is to make sure that that cancellation fee clause is as clear as it can be, that anyone, not just you or others, could look at that and say, oh yeah, I know what the cancellation fee is. That's going to cut down the likelihood of a dispute. Still doesn't mean a party's going to readily write the check, of course, but it will cut down on that likelihood.
Well said. Super helpful. And I know we're going to go into that, the force majeure and cancellations deeper in today's webinar. We're also going to have in early 26 a dedicated webinar around force majeure, because that seems to be a consistent topic that we've seen now for years. And I think it's probably getting close to the point where we have a dedicated reoccurring session on specifically that. So appreciate you educating us there, Barbara. The next question I have for you is around what's considered a legal versus a business clause? This is something we also get asked and see all the time, and I love your take.
Yeah, this is a great question, and my quick answer is to say everything is a business decision, right? The contract goal, again, on all sides, is to negotiate a business deal, to make a meeting happen, to have a place to host it, for a hotel to provide goods and services. It's all business consideration. Having said that, I think it is helpful for groups and hotels to think about how they might sort certain types of terms and look at them differently. So, for example, any terms that might be economic in nature, room rates, attrition minimums, cancellation fees, and so forth. Often we might consider those more generally to be business terms. So economic terms, the parties can negotiate and often do. Other terms deal with a party's legal rights under the contract.
Mhm.
So, for example, indemnification, choice of law, dispute resolution, those types of clauses. Those are often considered more of a legal issue, certainly, than a business issue. But at the end of the day, as I mentioned, they're all business issues. So let's say, for example, that the indemnification clause isn't written exactly as I would want it to be. Often that might not mean that on the group side, for example, that the group isn't protected. It just means that the risk level, the risk amount being accepted by the group might be greater than what is standard. So it's a business decision, from and I like to explain to clients from a risk standpoint. And my question back to clients is, what's your risk tolerance level? Because again, I would say this similarly on the hotel side on behalf of your owners. If you're making a change to a clause, economic or otherwise, that might mean more risk to the hotel or the owners, that's a risk tolerance question. And ultimately, the decision makers need to understand, is that a reasonable amount of risk to accept? Can we manage this risk outside of the contract and so forth? So I think that risk aspect can be a powerful tool, not only for internally sorting business and legal terms, but also in a negotiation. I think
Right.
using that concept, I think we've talked about this, Sean, in other webinars, to focus on, this might be an unreasonable risk for us to take, right? Describing it that way can sometimes be helpful and maybe make certain issues resonate differently with the other side.
So is it fair to say in this kind of scenario, like you, of course, you want your legal eagle as your trusted legal advisor there, but a lot of it is comes down to, like you mentioned, your risk profile and it being a business decision, but your counsel is there to help kind of give you the data and information for you to make that decision.
Absolutely, and I think this is a great illustration of how legal counsel can and should be helping you.
Right.
Legal counsel, again, all sides, can and should be helping you, the team negotiating on the front lines, to understand these clauses, understand the nuances, understand where you have flexibility and when you don't. You shouldn't necessarily always be beholden to that counsel, right? Always having to reach out to them. I think it's certainly something that more training for teams, certainly, more talking about it in webinars like this, more hands-on training with your legal eagle. That empowerment, Sean, I think is particularly beneficial no matter what side of the table that you're on, because you start that negotiation understanding where you have flexibility. And again, as we come into times when there's deadlines and other things to get things done, the team on the front lines has that empowerment to get the deal done. And that makes a big difference in that contract negotiation.
I'm glad you brought that up because I know that there's experts in today's audience, meeting planners that have been through contract negotiations and have seen the industry evolve over the years. But it really does it really does intimidate a lot of people when you're staring down a really old traditional contract with a lot of legal jargon in there, and planners might not always feel the most comfortable of being familiar with all of that terminology because they didn't go to law school. So one of the things that we've tried to do, like the group today that's hosting this webinar, is to try and distill that information to the meeting and events industry in a way that you don't need to necessarily be a lawyer or have gone to law school to be able to at least feel comfortable to have the conversation and be able to speak about it intelligently. And we're going to continue having webinars like these, and we have a bunch of free resources on our site. A lot of it is through Barbara and Kelly, but if anybody is interested in some midnight reading to understand the top 50 contract clauses, for example, Barbara and Kelly have put together content that Hopskip hosts on our site that will distill all that information for you in a really easy to understand manner. So please check out myhopskip.com. If you're looking for any of those free resources, you can grab them. All right. The next question, we're going to go back to Barbara on force majeure, our favorite topic.
Yeah.
Barbara, when it comes to force majeure, is it illegal? Is it impossible or other? What is this? And how do we attack it as a meeting planner or a hotel?
Yes, I appreciate, Sean, your description of attack it. Go back to the poll question we had on the disputes and cancellation. And again, many of you have certainly had business experience firsthand, potentially of needing to cancel a contract due to a force majeure event. So there was much attention certainly focused on that clause, and there has been ever since, whether the clause applied or not. As we've talked about in the past, every force majeure clause, there's two elements. So as you attack the clause, think about the two elements. And these clauses are written all over the map. I mean, I'd love to say they all look alike or feel like it's a lot. And I'll just say this just too in general. I think you've heard me say this too before. The way these contracts are written now, I recommend certainly, we're all busy, whatever works for you, whether print it or take it away from your normal workspace and really find a time when you can truly focus. Because I think often what you might find are clauses living in different places in the contract than where you might not normally expect them to live. And that's a separate topic. But going to the force majeure clause, I'll say that clause can look like a lot of different things. Some of the clauses have tack-ons or add-ons from a whole bunch of different clauses. So let's just sort it through and what I'll say, so maybe dissect the clause. Any clause you're looking at, you should answer two questions, should be able to answer two questions. And those two questions are the requirements that are needed in order for the hotel or the group to invoke the protections of that clause, traditionally cancel without liability. So the first element, the first question, what is on, and I use this term a lot, grocery list of the bad things that can happen that are beyond a party's control, right? So we can list acts of God, we can list fire, war, the lists go on, right? And often, as it should be, before at the end of that list, there's a catch-all statement. Any other cause beyond the party's control, or at the beginning, or including but not limited to. So always you'll want to see that catch-all. But what I find, Sean, is a lot of times in that grocery list, when it comes, for example, to curtailment of transportation, it may have a percentage. Let's just say 50% of the people can't arrive for the first day of the meeting. Many folks mistake that for being the second requirement of the clause, which we'll talk about in a second, the trigger, the standard of impact. It's really a grocery list item. And it's okay to be a grocery list item. You can negotiate whatever you want. What you're looking for on that grocery list, from my perspective, Sean, and the group side, is a list that covers a lot of the common things that we might anticipate would impact meetings, but also has that catch-all at beginning or the end. And most times I don't think there's a lot of trouble negotiating that grocery list. I think for the most part, groups and hotels do that very well. It's the second part of the clause that is, okay, fine. One of those things on the grocery list happens. What does that have to do to my ability to perform that contract in order for the clause to be triggered, right? In order for the clause to apply. And that's the sample on the slide that we see. You'll see on the list, you'll say, which makes it fill in the blank. Impossible to perform, illegal to perform, commercially impracticable, 40% of the people can't come to the meeting. Again, the list goes on, and that's kind of what the quote on the slide you see is sort of the other. This is the part of the clause that everyone should pay attention to. And a lot of times it isn't as cleanly identified. It's not in pink neon flashing lights as it might be to be helpful. And so you might have to sort through the clause, but you're looking for that. You're looking for that second requirement. Now, let's just be clear. Impossible under the law means no way, no how. And really, when I give an example of a group, coming to hotel for a meeting, the example I would give on an impossibility is, the lights are not on at the hotel, right? It's not operational. That's really strict impossibility. Anything else, difficult to get there, all the sorts, doesn't really matter. Impossible is impossible, probably the highest standard. Illegal certainly would be illegal to host a meeting. And of course, we've seen over the years situations where it may be banned from having a certain amount of people together. And so, again, we see examples of illegal. But really, what we're talking about is coming up with a standard of impact that's more realistic. And that's why I often use terms like commercially impracticable is used, which often means excessively difficult or expensive. So the lights are on at the hotel, but all airports within a 250-mile radius are closed, but you could still get a bus and come in, or, so forth. So that's the type of circumstance that we're trying to capture. Similarly, if you use a percentage approach about a number of people being able to attend, just be clear about what that looks like. And remember, that isn't to be confused with the grocery list item, right, that had the percentage. That's separate from the standard of impact. But, from a negotiation standpoint, from a legal risk standpoint, when the standard of impact is just illegal or impossible from the group's perspective, that is the most difficult of risks to accept. And likely the group is going to be accepting a risk, which likely means that the likelihood of the group being able to trigger that clause for the clause to apply is very, very limited, which is exact. And if the group wants to do that, nonetheless, that's that decision we were talking about. That's the risk tolerance that the group is going to take on. And we go back to the stakeholders or leaders. We say, are you willing to assume this risk? Understanding that, Sean, I think that's a good example of kind of that eyes wide open context. And similarly for the hotels that may feel, their owners feel that it only has to be illegal or impossible. There are lots of circumstances to say that that standard of impact would not also benefit the hotel either. So I think that's an issue which needs to be thought through. And I would just say, and throwing it back to you, Sean, I would just say, I think it isn't so much about the words. It's about everything else that's within that clause that's going to answer this in any given contract.
Would you say that is the number one challenge you see planners facing today when they're dealing with force majeure, is trying to make sure that that gets answered in the contract? Or where's the number one, if you had to give the audience in today's webinar one tip or suggestion for how to approach this clause in their hotel contracts, what would it be, before I put words in your mouth? Because I have an assumption, but I want to hear what you have to say.
Sure. So, just to be clear, I wouldn't say that generally force majeure clauses are kind of the number one problem or impediment in contract negotiations. I think often they're overcome. But when it comes to this particular clause, what I would say is focus on the second component, which is that standard of impact, and make the case, again, if I'm the group side or I'm the hotel side, make the case to the other party why the so-called bar requirement needs to be set at a certain level, and be prepared with examples, right? All of you unfortunately have lived examples, shared examples, but I think we all could come up with an example. The more compelling your example is, Sean, the better. And, from the group's perspective, the group can share things like, my meeting is 100% comprised of folks that are from the federal government. And if the federal government is shut down, or et cetera, right? So sometimes it's a matter of context. And often I think another good approach, Sean, in negotiation is, help me to get this done. Give me something that my leaders are going to ask me, what have we done to address this potential contingency? I need to be able to tell them something. Help me give you know what I mean? It's that other side, right? Help me help you. But
Yeah,
I think
exactly.
I do think it's important, because to me, what it signals in negotiation, I want to close the gap. I need to close the gap. And I think you could say that in many cases, people are going to devote the resources to getting this done. And that's one way, Sean, I think effective way to look at force majeure rather than battling over particular words.
Well said. We have a couple questions actually from the audience around cancellation and force majeure that, Barbara, I think you'd be perfect to answer if you're on board here. To the cancellation issue, if a US planner is negotiating with a Canadian hotel that's owned and managed, and because Canada doesn't have the same issues of litigation, what's best to negotiate in the contract? And maybe that is potentially an unfair question to ask you if you can't actually see the contract, Barbara, but love your take if you have any thoughts.
Absolutely. So I think anytime you're dealing with parties that are located in different countries, I think it's always a good strategy to address choice of law because there's a whole body of case law that will take a lot of time and spend a lot of legal fees on arguing about it. And I think there's a potential, again, you want to do business in an effective way. Choosing the choice of law, especially between countries, is particularly important. Uh, Within the US, you could say the same thing, but I think you might find a different approach generally of a comfort level or a similarity. But again, outside the US, certainly that's expected that it may be different. I think oftentimes the location where the meeting is to be held often is what the tendency would be, that would be a preference in choice of law. But that's got to be your number one issue. The number two issue, again, dealing outside the US between countries, would be perhaps the type of dispute resolution. So whether it's litigation, whether it's arbitration, et cetera, there's lots of things there. Normally, that doesn't have to be specified in a contract. Sometimes you don't want to specify it in a contract, but dealing internationally can be a very effective way to manage disputes because of the different ways in which parties could resolve the disputes. Again, it's more business efficient, it's more cost efficient. So I would say going into that negotiation, Sean, is between US and Canada, go in understanding which country's law might apply, because going back to the force majeure clause, for example, the case law may vary, right, on that point. And that's going to be the determining factor. So I do think that's a good example. The question illustrates a great example of why all these contract terms do need to be read together, if you will, right, in that impact. Because just if we didn't get the language a certain way in the clause, we have this different state law or country law, it will impact. And that's not to say, by the way, that law won't change, right, between now and the time the contract was performed.
Well, appreciate that. Well said. The other question that popped into my mind a little bit earlier when we were talking about force majeure is, what is the number one contract clause that you typically see your clients, groups, coming to you either needing guidance, input, advice on how to best approach? Is there one that comes to mind?
Yes, I would say, Sean, primarily it would be room block attrition. I mean, if I had to think about, again, I'm representing the group side, think about all the contingencies that the group will face. The contingency of not being able to meet its room block is priority number one. Again, I realize corporate planners, you may have different approach, but even then, attrition can be an issue too. So part of that, Sean, is negotiating that economic item, right, which might be the minimum number and so forth.
Right.
Part of it is negotiating out potentially reductions in block. I have a client, we're working through contracts in 2034. In 2025, we're taking a guess, and we need flexibility. They need flexibility on reductions and ultimately how that's to be calculated, whether it's calculated on room count versus room revenue, whether it's calculated on a per night basis versus cumulative,
right,
whether there's credit for resold rooms. How do we figure it out after the fact? We do an audit, what rooms count. I mean, I think, Sean, those nuances within that very big issue, aside from cancellation of a meeting for a business reason, the attrition is going to be likely the group's single most potential source of liability, room attrition, that is. Food and beverage, potentially, but often that can be overcome, just unfortunate with the cost of food and so forth. But the room attrition, I would say, it isn't a stumbling block per se. I wouldn't say it's a circumstance that might prompt a party to negotiate with their feet and look at another venue. But it is a nuance where it may come down to exactly the business decision we're talking about earlier, which is that risk tolerance. And, we look at it too. Client that's being asked to sign for 2034, they're getting a lot of benefits, let's say pros, right? But we have these risks, we have the cons, we have the, just like anything, that's going to have to balance itself. And, whether you're the decision maker for your organization or someone else's, the case that we're going to need to make is what amount of risk are we willing to accept? And what are we going to do about it? What are we going to do to manage it? So, for example, on attrition, we have right to review. What are we going to do that we all remember that we have this chance 9 months out to reduce? Where are we putting this in our system? Are we putting in pink neon flashing lights? And again, these are just internal risk management. But I think, Sean, going back to your question on the negotiation, so the top issue, I would say that from my camp is what that would be.
Yeah, that doesn't surprise me. And I know a lot of planners that use HopSkip today are very, very mindful and sensitive of, how attrition can impact their costs. And it sounds like, Barbara, when you're kind of approaching the attrition clause or the negotiation around that, it's almost like you're a pilot and you need like a checklist to kind of make sure that you're approaching it and communicating it and contracting it in the right way, so you don't end up with a crazy high cost from attrition fees because you might have forecasted what the block is going to look like incorrectly or way off. And I guess that's another question I had for you there. Sorry, did you say something, Barbara?
I love the description of checklist. The pilots, for what they do is, it's obviously a very different circumstance, but I love the concept, Sean. And I've actually talked to clients beyond the site inspection checklist and the negotiation checklist. I like the idea of a cover sheet, if you will, for contracts when we're getting to the final phase group. Let's just say we use an example on the group side. We have the cover sheet is sort of all the things that we call standard that we look for, right? And then when I'm getting it to whoever's going to sign it, or I'm sharing it with my colleagues for final approval, I'm noting, using that cover sheet, for example, to note the things that are not standard, right? So, and I'm using it as I'm using it as a way to let everybody know, make sure, again, we're all busy, let everybody know this thing, attrition based on per night, this thing is way different than normal. But Sean, you said it was okay, and so said it's okay, and here's what we're doing to mitigate. And we'll institutionalize, if you will. We'll put into our systems and so forth ways to manage that. I just think it's a helpful tool. Again, you could do this a lot of different ways, of course, but I do think it's a helpful way for all of us to do that final check. And, many might see this as a, cover yourself provision, right? A CYA, but it isn't, because at the end of the day, we don't work for ourselves. We work for the organizations that we represent. And in that way, we need to show that we're good stewards. And I think that cover sheet, that type of approach, whatever vantage point you have, I think that's a really good way to proceed. And it gives everybody that kind of final check, as you mentioned, Sean.
And yeah, learned a new thing today. Cover sheet. I didn't know that's what it was designed to do. I appreciate that. You're always educating me, Barbara. Always. We're going to go to the audience for a poll question. This is going to help us craft our next series of webinars. And what we're really trying to understand from you all is, what's your top concern with event contracts heading into 2026? Should have the polls displayed in front of you. Yep, looks like we do. Is cancellation policies, force majeure, payment terms, vendor disputes, or none of the above? Looks like the results are coming in. Cancellation policies, not a surprise there. Right now it's number one. Payment terms, Barbara, is that something that you've seen?
Absolutely. In fact, that I was just going to say that, Sean. It does not surprise me that a fair amount of folks are putting this down. And I will say, this is also, if this isn't on your radar screen, again, on all sides, it should be. And when we use that concept, when I refer to that concept of payment terms, I'm referring to anything from the extension of credit that a group might be accustomed to doing under a master account framework, to the payment of deposits, to the prepayment of a master account, to the prepayment of a contingency deposit, to forfeiting a deposit, to getting interest charges, to the list goes on.
Right.
And it's again, it's a good example of saying, gee, I get to that contract and I see that master account clause and I just go right past it because that's always the same, right? Well, what I might have missed, for example, is it says, oh, by the way, attrition fees need to be prepaid 14 days out. Again, my separate side note is we don't even know if there's going to be attrition, right? Till after. But when that's in there and I get a call 30 days out that says, how are you going to be paying that amount? I'm going to be looking at that contract. So looking at these so-called gotchas, be aware of, I'm wide open, however you want to frame those, is really important. So it doesn't surprise me, Sean, that some of the folks that are viewing today have experienced challenges with payment terms. And I expect that they will certainly face those challenges as well. Because again, I think often what's come out of the last many years is the challenge or difficulty in collecting fees. Again, I go back to the attrition example, right? We go through all the efforts and negotiate, and then there is attrition. Oh, I want that check written tomorrow. What is that going to look like? And you know, that's really the case. And I think on the extension of credit piece, I'll just say this on the group side, don't assume that because you've always had credit with the property, you will have it again. Everyone reevaluates as they can to think about the credit policies, but make sure you understand often should be objective standards of credit worthiness, essentially akin to a credit score for an organization and what that's going to look like. And in fact, Sean, one thought, and I've had some corporate clients suggest this approach and use this approach, that you would negotiate with the hotel. It kind of goes back to what we talked about earlier in that RFP, saying what the expectation is as to the amount of credit. So a group completing a credit application at the beginning of the process, agreeing that there'll be extended credit of a certain dollar amount. And then thereafter, that group we put that in the contract. And unless the bottom fell out from an objective standard, right, with the score, the group would be entitled to at least that amount of credit going past that. So it's one strategy again in tackling what is a challenge and many payment concerns. And if you haven't experienced it, that's great. This is a time to prevent it, right, or address it in the way that will work best for your organization.
What, and you might have answered this as we just were speaking, but what would you say, Barbara, is either your biggest concern with event contracts heading into 2026, or your one kind of piece of guidance to give to the audience today as we head into the new year?
Well, I've never been one to say that it's a buyer's market or seller's market because it always depends on who you are, where you're going, when you're going. And there are great deals from now to the end of the year. There'll be great deals after the beginning of the year. I think we're all fortunate to work in a business that is wired around doing business with one another. And I think that's an important element. I would say from the group's perspective, contingency planning is really number one. If things are going well for your company or your organization, terrific. I hope they continue to do that. But just in case, let's plan if we had less pickup and so forth. Similarly, on the hotel side, it's a brand new hotel. We don't think we're going to have construction, but maybe we might have some. And what do we want that to look like? And so contingency planning, Sean, I think it continues to be the challenge. Certainly don't think it's a challenge that is not that the parties aren't able to overcome in a negotiation, but it is a challenge. And perhaps arguably more of the challenge might be identifying what contingencies are important to your group. Like what things could happen internally. That's a lot of internal conversations. Externally, perhaps at a hotel or convention center or venue, what are the contingencies that you want to ask about there? And then what's the best way, again, to address those contingencies in the contract? That continues to be front and center with any event contracts. The other thing is a lot of parties are, I had this come up the other day in a discussion with a client and said, we negotiated this contract back in 2017 and the meeting is next year and the contract's all wrong and bad and I've gone to the hotel. I say you have to change this. And you've heard me say this over the years, Sean, is that should be a conversation, not a confrontation.
Right.
And coming to that conversation with the ability to work through the business issues. Remember, once the contract signed, it takes two parties to change it. So, party might sit back and say, sorry, you didn't know that in 2017. But most parties are probably going to be wired around, getting the contract to where it should be.
Sure.
So the issue becomes that approach. So I would tell clients, on the group side, if you've got a meeting coming up next year and you have a contract that's not working for you, certainly always evaluate it. And I would like to say on the hotel side, the hotels would rather understand concerns or challenges before the event. And I think that's a reasonable approach to take. And I think it's something that's indicative of the way that for larger meetings and events, our booking lead times are particularly long. So I think,
Right.
You may wake up one day, if you will, and look at that contract, and then you might say, what's that person thinking when they signed that contract, right? And we all understand a different framework there. Sean, I wanted to respond to one question that came in the queue, and this continues to be, and I know we had a question in the deck, and certainly I'll just say too, but unfortunately with Kelly having technical difficulties today, we'll be recording some separate videos on some of the topics that we wanted to intend to talk about, and we'll get those out to you all so you have those. But one topic that came up was the fact that with hotels and other venues, there are exclusive providers of services, whether that's legal and so forth. And again, I'll certainly Kelly can share more on the hotel side. I'll say, hotel owners, anytime somebody's coming in to do something in their building, they want to know who it is from a liability standpoint and the rest. So certainly for hotels that might have that to say you've got to follow our policies or have insurance, so forth. Certainly, I think that's reasonable. You would expect that if contractor came to your house, you would expect that, right?
Sure.
What we're seeing though, Sean, on that side isn't so much about that exclusive arrangement. I mean, perhaps folks don't like it and they'll think about it. What I'm saying from the group standpoint is the lack of predictability, and perhaps specifically you could say lack of transparency or no transparency, none at all. But where it really comes in isn't so much I want to be nosy and know how much money you're making. Where it comes in is I've got to plan my budget. I got to go to my board or my leadership and say my budget. Boy, I need to be pretty close on my budget. If I were looking at my hotel bill, I might say I predicted everything on my hotel bill for the last meeting, except for all the various, and use the example on audiovisual services. And it's way different. And why did that happen? And how do I control? Because I don't want to be in this situation next year, right? And so from a budgeting standpoint, from a cost predictability standpoint, I think groups and hotels, again, just using hotels as an example, can do a better job at that predictability and that budgeting. And that doesn't always mean, use of outside vendors. Certainly it could mean that. But what I think needs to happen, Sean, and I've worked with some groups on this, is just go back into your contracts, look, and I would say that go back to all the master account bills from the last couple of years, look where your pain points are, negotiate within those, but look at the provisions in the contract regarding around technology, audiovisual services, all those things, food and beverage, and look to see what that language looks like. What I think is helpful is for the parties to break it out a little bit more specifically. Are we talking about equipment? Are we talking about services? Are we talking about rigging, which is a different situation, electric, and the list can go on. But I think in the RFP, put the expectations out there from the group's perspective and make sure the language that in the contract reflects that. and watch out for the gotchas. Watch out for the service charges currently X, right? Or override by the policies and procedures, the hotels and so forth. Just do what you can to fence it in, to guard against it, and let your counterpart on the group side or the hotel side, if it is, understand, I need predictability.
Right.
I have X dollars to spend. I need predictability. And how can you achieve that predictability while living within a framework that a hotel might want to have exclusives for certain services? I think this is another example, Sean, where we can have a conversation, not a confrontation. And if need be, that conversation isn't well received, negotiate with your feet. Because I likely think there are plenty of hotels or other venues out there that hear groups loud and clear on these pain points and are ready to address them in a number of ways. And I think, Sean, in the coming year, I would likely think we're going to see more movement and discussion on that topic. And I think that's just going to be for the betterment of the industry.
I would agree. Well said. We are literally almost at time. I can't believe 57 minutes already flew by. Barbara, thank you as always for your insights. I know that there seem to be some audio issues for a little bit during the webinar. So as Barbara mentioned earlier, our other amazing host, Kelly, had some technical issues on joining. So what we're going to do is we're going to share the recording of today's webinar by early next week to everyone who registered, like we always do. And then we're also going to re-record some of the content that we didn't get to in today's webinar, and we'll also distribute that in the upcoming weeks as well. So I want to thank Barbara again, great job, and everyone who registered. Thank you all for engaging. We really appreciate it. It's so great to see so many familiar names coming to these over the years. We're always open to feedback. And please, let us know what you wanted to hear, but you didn't hear today, because we are planning as we speak for 26, and we'd love to make sure that those topics are included in the future. So thanks, everyone. We appreciate it, and we will see you next time. Take care.
Thanks so much.
Bye, guys.
Well, Kelly Bagnall here with Barbara Dunn, and we are going to talk briefly about the federal and state junk fee laws that have come into play and how they impact the meetings and event industry. So, as everyone likely knows, the federal government finalized through the FTC a narrow rule in 2024 covering junk fees, primarily in relation to live event ticketing and short-term lodging rentals, which include hotel rooms. And so that particular FTC guidance talked about making sure that when individuals are looking at the sums that they're going to be charged for the night of their stay, that it is an all-in fee, and all mandatory fees are included in the advertised price, except for taxes, of course, and that it's clearly explained for the consumers what they're getting. And California had previously formed a body of law under their Deceptive Trade Practices Acts that address similar concepts. Since the FTC has issued their guidance, there have been other states that have followed suit: Massachusetts, Minnesota, and Virginia. And we also have Colorado and Connecticut coming online in 2026. So you're going to see more states that are going to implement their own version of the junk fee laws. And for example, the nuances for Massachusetts are they want the total price. They use kind of keywords, the total price to be included when you're looking at the sums that are going to be paid on a nightly basis. So as far as, and if there's anything you wanted to add, Barbara, just to the general law, let me know. But other than that, I was going to jump into what that means for us. So what it means for us is when you are online looking at a hotel, for example, and you're looking at their rates, you're going to see a fee that is going to be inclusive of mandatory fees. It may be broken down differently. It may be itemized. So you've got a base fee and then a mandatory fee, and then it gives you a total fee. There's a number of ways they can achieve compliance with the law on their websites. On the group side, if you're negotiating your contract, you may still see it broken down in the contract, but you're going to see a total fee, or at least the reference that you can create the total fee. The most important thing for the group, though, is if they are not using the hotel's reservation systems for booking, that they're going to put information out to the market that is accurate in compliance with state laws and federal law. So Barbara, what are you seeing with your groups and your companies that you represent on this side?
Yes, Kelly, I would say, from a compliance standpoint, and just to clarify, I know a lot of the state laws are focused around, for example, the state laws around personal data are focused on where someone resides, the resident piece. I understand these junk fee laws are a little bit different. I understand, is that correct, that they're focused on where the transaction takes place? Is that correct?
Well, they could be where the person is from or where their transaction takes place. But when you're looking, they're all a little different and there's some nuances. So you want to make sure that you're globally complying.
Okay, great. Because I think that's definitely, so that's a great strategy. Let's just talk about that overall. Similar perhaps to some of you, that have complied with, the EU's GDPR on the personal data and so forth. We always look at perhaps what the highest standard would be and have you work to comply, group or hotel side, comply with that higher standard, with the understanding there may be lower standards, right? I think on the state law side, and I think that's a good strategy, just generally to comply. So Kelly, I think from the group's perspective, the biggest concern, as you just pointed out, is the third party housing companies, registration companies, et cetera. So to be clear, those are the companies that group may retain to facilitate a central point at which people would make hotel reservations for a citywide event, for example. And of course, that citywide event and that listing is going to probably have many hotels on it, different brands, et cetera. And the goal is to push everyone through that to get reservations in one central point. The housing company, of course, manages that and sends the hotels a list. And it can be very effective, again, for the large meetings. However, to the point you just made, the housing company is the one that's going to be posting the rates on that site as part of that transaction. And in that way, the compliance issues that you've worked hard, I'm sure, for your hotels and others to comply with how those rates need to be shown may not be the case on the third party's website, the hotels, or pardon me, the housing provider's website. That definitely raises a compliance issue. And I understand why the hotels would be concerned with that. And certainly I would think it's possible to link the technology such that a person could complete a transaction through the hotel's site. But that said, what I have seen on the group side are those convention registration services companies coming back to the groups and saying, group, we're going to help you, facilitate housing, but you are 100% responsible for compliance with this law. And the groups, what does that mean, right? So I understand the strategy from that company's perspective, but by the same token, given all the nuances, Kelly, you've just described, I think it's difficult to, look at and making sure there is compliance. So from the group's perspective, certainly I think I would want to do due diligence for the housing provider and find out what its strategy is to ensure compliance. And Kelly, ultimately, I think as we talked about, the hotel being the one who could best control it, I would still think, and correct me if I'm wrong, that pushing, links to reservations using the hotel sites would still be the preferred method to ensure compliance. Or if there's not compliance, right, it's on the hotel, not on the group.
Well, the reality is using a third party vendor like a company as you described, that's a group's decision. So if they're going to take on the liability to make sure that their provider is doing it legally correct, then they have a decision to make, right? You can either go through a system that is controlled by the venue, or you can take there might be some risk depending on what housing provider, what housing service you are using. But at the end of the day, compliance with the law is everybody's obligation when it comes down to making sure that the total price is available for the guests to see.
Well, the other nuance that comes up, let's just focus, I think, a little bit on that concept of mandatory fees. So
Sure.
as I understand it, the mandatory fees are those fees which need to be disclosed, right, as part of that all-in price. In other words, that those need to be included in the all-in price. I understand these as fees that the consumer can't reasonably avoid. In other words, in order to obtain the room, they have to accept these fees. And I understand that would include resort fees. Is that correct?
If it's a mandatory fee and it's not an optional fee, then yes, it would be a fee that needs to be disclosed. There are certain fees, however, that, for example, valet parking. Well, not everyone has to valet park. Parking in a parking lot, well, not everyone brings a car. Pet fees, not everyone brings a pet. So there's certain things that are excluded and carved out. Movie fees, those types of things. You don't have to use the internet if it's a charge for internet service. So, those are not mandatory fees that wouldn't have to be disclosed. But if there is not you make a choice type of decision, then it would be considered a mandatory fee.
Okay, great. Now, thanks for explaining that. And I think you raise a great point, which is we can't even really talk about resort fees in a general way because there are different strategies for different properties.
Yes.
That some may be, within those things and others may be the optional. I think that's a great explanation. Now, coming into play, certainly for a lot of groups, would be they were working with a third party provider. They may be seeking commissionable rates in the contracts. Similarly, or separately or together, also hotels may be offering groups a rebate, certain amount of dollar, right, amount on each of those room rates or room nights. So the questions certainly come up with these compliance laws as to whether the rebate and commission needs to be part of that all-in rate. And my understanding, Kelly, and get correct if I'm wrong on this, is that because those meaning commissions and rebates are essentially behind the scenes transactions, right, part of the doing business, that those would not be considered mandatory fees, which would need to be disclosed. Now, disclosed for purposes of the junk fee laws, right? I understand certainly why a hotel would seek disclosure generally for attendees, but is that your understanding as well when it comes to rebates and commissions?
Well, when it comes to, I mean, the rate is the rate, right? Whatever comes out of that rate is a different issue, but the rate is the rate, and then you add to that the mandatory fees. I think if it comes to a disclosure issue, then you're looking separately at whether or not there's various consumer rated laws, for example, on a rebate that need to be disclosed in your event materials, where you, the group, are advising them that a portion of the room rate is going to be used to offset certain group expenses for that function. So, but the rate is the gross rate is the gross rate that we're adding the mandatory fees onto. So they already know what the total fee is.
Okay, that's great. And that's a great way to explain it and a great way to look at it too. Another nuance, Kelly, that I've seen come out of this is with regard to the lowest rates clauses that a lot of groups seek to have in the hotel contracts. In other words, hotel won't offer lower rates or lower group rates during the block dates. And that's a topic I'm sure for another day. We have lots to say on that front. But the tie-in I've seen with regard to the junk fees is whether it's that top rate, as you kind of described, the gross rate, or the all-in rate. That's the rate that we're focusing on for purposes of a lower rate clause.
I hear you. And I do
Yeah.
think it does require all of us to relook at the wording that we're using if there's a lowest rate clause even allowed in the agreement, as to whether or not we're using language that is matching the concepts.
Yes, that I agree with you. I think that would make the most sense. So for example, if the group rate is defined as, again, what we've kind of been referring to as the gross rate. And then, I mean, I would think, you know, you could determine an all-in rate, although I could see a circumstance in which between the time of contracting and the time of the meeting, you know, it might be a local authority adds a new tax or something in there, right? We may not be able to commit ultimately to the all-in rate. But if the group rate is used as the baseline, as you point out, for purposes of lowest rate, that might match up, right? In terms of what we might need it to do, at least the group might need it to do when it comes to the lowest rate provision.
Yeah, I think maybe a better terminology is base rate, since there may be a municipality and taxes aren't even included in the all-in pricing anyway. Taxes and whatever government fees get added onto that. And if there's a new convention center fee, that's still a government fee, which is it's going to get tacked on anyway. But if we kind of think in terms of a base rate, as our industry has historically been a base rate, then that helps us match apples to apples when it comes to these types of provisions.
Okay, great. Yeah, I think it's a great strategy. And again, this is a great opportunity for folks to really look at their contract templates. Many of you probably work with templates or contracts that have a variety of terms to say the same things or different things. And, you know, it may seem, you know, kind of basic to say go back and sort of sync up the terminology, but this is a great example of the potential of a dispute later on if the technology, or pardon me, if the terminology is not synced up. And I
Right,
think that's a good lesson learned.
I think that it just gives areas of friction that can be resolved easily, but you're right. A holistic approach to contracting is needed, but I agree.
And just wrapping up on this point, Kelly, on the junk fees, are you seeing any other developments on this horizon? Any other, you know, regulatory developments that might further expand the scope of this?
Every day is a new day in the regulatory world that we have today. And so, we are constantly monitoring and watching kind of how it evolves. But I think what we're seeing, just like we've seen the states come on board, you're seeing other states take this up as an issue, and we're going to see that going forward too. So consequently, there's going to be multiple different nuances depending on the state you're looking at. So,
Great. Thank you so much. It's great. It's a great discussion. I think we continue to build awareness on both sides, and we continue to keep our listeners posted on the developments.
absolutely. Thank you all.